sessions. We have first session. I have described how to use the Elliott wave calculator, option scanner, option Greek scanner, and we have also seen the Gantt trend reversal date. Again, second session I have explained Fibonacci calculator, use of Fibonacci calculator, and how to use the summary tab of Smart IT tool. Third session I have taken that volatility calculator, how to use the volatility interface of our software. Along with that, I have also explained the option scanner. So how to utilize for the option scanner, intraday top and bottom also we have seen, as well as we have seen for the monthly top and bottom. Then fourth session we have discussed about the pair trade using the Z score and beta decoupling. So that was many trade outcomes I have shown there. And last session I have taken it Gantt trend change date, how it has performed. Gautam has explained it, and here intraday trade using the option scanner also I have taken. Camarilla calculators also how to utilize that also I have explained it. So in Camarilla I have told that we have added the new features like the cycle theory into the analysis. So this is the Camarilla feature we had, which is unique from the original Camarilla. So that part also I have explained you, and today is the last sixth session. I'll be demonstrating you how to use option strategy backtesting tool and advanced technical indicator. So these two tools I'll be explaining to all of you, and we'll be starting the session at 9:30. Just have a look as per the one standard deviation, what is the what it is suggesting today. So as per the Smart IT tool, so I am just going for the index, and September I load the data and analysis is happening automatically. So it is telling that 17,622 above you have to buy, 17,553 below you should sell. So if you are selling at 17,554 below, so you must hedge it with the put option, sorry, call option. If you are selling at 17,554 level, then you must buy a 17,550 call option, 550 call option along with the sell trade to hedge your trade. So for the sell trade, the stop loss will be 17,643. So that will be your stop loss. So this is for our NIFTY future. Suppose if you are buying at 17,622, your stop loss should be 17,533. It must be hedged with the 17,600 put option. So buying trade must be hedged with a put option purchase. Selling trade of NIFTY future should be hedged with one call option purchase. This is the simplest hedging technique. But those who are little advanced trader, they can able to sell the option also. Always it is not recommended to buy the options. So you can sell the options also. So this is about the one standard deviation view for the day, and just we will have a look at our monthly top and bottom. So monthly top and bottom, what we have, I have suggested to you, and last session also I have told to you. So we have almost 17,146. This is the level from where the retracement started. So I have told you till we are in the retracement phase. We are not in the bottom formation phase. So there are two things are given here. One is the bottoms and tops. So one top has been formed, 18,146. From here the retracements are starting. So this retracement will be completing at 17,344. This is the level we should watch out. If this level breaks and this retracement level breaks here, 1.618 is very strong level. If it breaks, then the first bottom will be formed at 17,295. But till we are in a uptrend, we are just coming out with just retracement phase we are going through. So retracement phase we are going through. That is for the monthly top and bottom. So intraday top and bottom has a different objective. So if you are going for intraday top and bottom for the day, how you can read that this thing? In intraday top and bottom, these two levels are very important, 17,781 and 17,513. If this level breaks, then that day 5th or 7th cycle bottom also possible. Same way, if it is first top is being crossed over, the 5th and 7th cycle top also possible on that day. So whenever you are finding out a top or bottom is giving a crossover in an intraday, hurriedly do not quit the trade, wait for higher targets. So market is now in the retractive phase. So I have just shown you this thing, and today we will be learning two things here. One, how to use the technical indicator. Gautam again we will discuss about the volatility scanner. So the objective of the volatility scanner he will be discussing, and I will be taking on the technical indicators part. Here our technical studies are very different. So those who have taken smart finance courses or bought the smart finance courses, they will be knowing that when we talk about technical, many technical indicators we have converted it to a forward indicator. What is a forward indicator? The indicator which doesn't depend upon the historic data alone. So keep in mind, there are two types of indicator. One is forward, another is backward. So all technical indicators are backward indicators because they are dependent only on the historic data. When I say historic data, that says 5-minute data, tick data, anything you take. Once the data point is being created, price point is being created, then only these calculations will happen. Forward indicator doesn't depend upon that. So forward indicator will give you specific calculation which has not happened. So all Gann studies, Fibonacci studies, Elliott studies, all these studies or the studies associated with your monthly top, bottom, everything, these are all forward indicators. So now we will be going with the same technical indicators here. Let us experience how smart finance technical indicators works. So here very few technical indicators we have analyzed here, or we have put it here. So you can say all these technical indicators, Bollinger Band, stochastic, then RMI, relative RSI, then displaced moving average, simple, exponential, triangular, all these moving averages are there. So it is giving you two recording, two analysis. One is historic recommendations, the current recommendations. When I say historic recommendation, it is as per yesterday's data. Yesterday what happened? So based on that data, it is telling 5 by 10 moving average say that it is a purchase, buying recommendation. So here you can say that Williams percentage is telling it is neutral as per the yesterday's data. Now it is suggesting buy. So here you can say Bollinger Band is a sell. Yesterday also sell, today also sell. Relative volatility index. This also, yesterday it was a sell indication it was giving. Today it is giving buy indication. So here what you are getting here, as per the historic recommendation, yesterday day end, I repeat, yesterday day end, it was telling 5 out of 10 indicators here suggesting buy, 3 were suggesting sell, and 2 are suggesting neutral. Currently, it is suggesting that 7 out of 10 is suggesting buy, 2 are sell, 1 is neutral. So majority view is towards the buy as per the indicators. But still, indicators suffers that same problem of your backward passing. So there is a, now you can say there is a, the prices have drifted down, and we are, again, if I can just go and reanalyze these factors. So here, again, I am going, just loading the data is got loaded, and I am going for analyzing. So you can see here the, so here the reference prices, you can just have a look here. First window when I have shown, the reference price was 17,503. Second window, it is telling that reference price is 17,492.6. So these this historic recommendation will remain constant always. This will not change. However, the current recommendations, time to time, it will go on changing. If you are following the technical indicators, so slowly we will enhance these technical features to more indicators. So you can say there are, how many indicators are there in the market? Those who are the experienced traders, can anyone will tell me? How many technical indicators and oscillators are available in the stock market studies? Any idea? To 3,500 indicators and oscillators. 3,500. And all these 3,500 indicators and oscillators are based on historic data alone. In moving average itself, you have near to 45 moving averages. Simple moving average, exponential goes to the triangular, goes to your time series moving average, displaced, many things. 30 moving averages you can go get from there. Then pivot itself, you are having some 10 to 12 pivot methods. So all those primitive methods are statistical one. They are lagging indicators. To make it as a forward indicator, we need to add the component of volatility into it. How volatility should be accommodated in that study. So once you add that, you will get the recommendations in this. However, it still suffers from the data lagging. So still the method suffers from the data lagging. Technical studies always will have. However, if you are using this tool, always just have a look, say Bank Nifty. I want to see that how many indicators are now suggesting. So here I can say that here Bank Nifty views have entirely changed. Yesterday out of 10, 5 was indicating buy. Now 6 indicators are suggesting a sell. 6 indicators are in the favor of the sell out of 10. So whatever we have programmed, and all these 10 indicators, what is being programmed here, all are made the dynamic indicators. The dynamism is being added to it, the factor of volatility into added to it. Then we have one more. So this tool all of you are having. So one more tool we are having, Volatility Stock Scanner. So that Gautam will explain you. It has versatile use. You can do pair trade, you can do intraday trade, you can do investment, many things you can do. So Gautam will explain that. Over to Gautam.
Good morning, all of you. Already Ranjan sir explained you about this volatility scanner to do pair trade using the Z score. Today I will go with that again. So you have to open that stock scanner first. Then you have to scan the stocks. It will scan all stocks. Data is loading. Okay, you have got the results. Here we can describe the stocks based on the volatility. First one you are saying is rise in volatility, and second one is falling volatility, and third one is no change in volatility. And if you're going to do the pair trade, you can categorize the stocks as independent and dependent. Nifty always will be the independent. Rest of the stocks will be a dependent stocks. So, and first rule is for the pair trade using Z score is correlation must be above 60%. Then only you can enter the pair trade. So
Double click in symbol to see
uh,
the Z.
this Z score will be based on the previous close reference. If you are looking for a current Z score, you have to double click on the symbol. So I am clicking on the UPL. It will give you the current Z score as per the current price. That is minus 2.034. And
So Z score is a very easy method of doing the pair trade. Negative Z score means, so here as last to last session itself I have taken it. Just have a look here. So Z score is +2. Buy the dependent, sell the independent. So independent is always the Nifty. Z score is negative, buy the independent and sell the dependent. So buy the independent and sell the dependent. So if you go to here and look into the UPL, so currently just we have seen the UPL. Suppose you want to form a Z score related pair trade with Nifty and UPL. UPL is also a part of our Nifty index. So this is saying that minus 2.03. So this suggests that you should buy the Nifty and sell UPL in their future market based on their values. So say here Reliance was having 0.75 till yesterday, but correlation is pretty good, above 60%. So now if we are just going to double click on the Reliance and going to know, see here the Z score is coming to negative Z score, but not in our predicable range. So we need -2 or +2. It is minus 1.9, sorry, minus 0.19. So this is the first use of this Z score is in the pair trade. So other investment aspects, both will discuss.
we have given the notes also, you can refer this. Stocks which is having more than 60 correlation with rise in the volatility, that is good for intraday buy trades. These are all the things. And stocks which is having correlation 60 with the falling volatility, which are good for short-term investments. And the stocks having 60 correlation will give you the less return as compared to Nifty, and it will give you the less success in intraday trade. And the stocks having more than 1 point positive, more than 1.5 positive Z score with rising volatility, which is good for intraday buy trades, as well as 1.5 Z score with falling volatility are good for the short-term investments.
Same process you should follow. Say it is positive 1.5 Z score is good for intraday buy. If it is negative 1.5 Z score, say here it is negative 1.5. It is here negative. So these are the stocks are good for the intraday selling. So rising volatility, negative Z score is good for the intraday selling. Rising volatility, positive Z score, good for the buying. So this tool solves your second problem, that it has filtered out the stocks, or it has created, this scanner has filtered out the stocks which is best suitable for your sell trade and buy trade in intraday. So you got a list of stocks. Now with the list alone you cannot go with the trading. So you need to see the stocks trend, price trend. So that price trend also will determine that the price trend will determine whether you should buy or sell. So, but all in all, you can say this is a filtering tool. This is a tool which can filter the stocks and this is a tool which can give you by the basis on the filtering you can form a you can say investment, short-term investments. When I say about short-term investment, 30 to 60 days. That is the duration, 1 month to 2 months period, 30 to 60 days. And it can help you to filter out the stocks for intraday trade. It can help you to form pair trade. It can help you to make a good decision for the short-term investments. So it has a versatile use. So keep using it. It is Bharat Force what he has told. Negative Z score. It is good for the intraday sell, provided it must give you the intraday sell breakout. So sell breakout. Once it gives you the sell trend, that day these the stocks will definitely going to give you the success. The success ratio of those who are the stock which is obeying the Z score or having a proper Z score or Z score indicator is set for the stock for a buy or sell. On that day, if you get a chance to enter in the trade, then that stock will have a very good success. So Bharat Force is going to give a good success if, as per the Saurabh's question. This particular tool, advanced option strategy testing tool. So anything, any strategy you initiate, first we need to test whether this strategy works well or not. So fine. So here what I have taken a random strategy. Say on 3rd August, when the Nifty was at 17,388 Nifty spot. It is not future value, it is spot value. When Nifty was at 17,388, just 6 to 700 point up, I formed a calendar spread. Means 18,000 call option I have sold, 18,000 call option of September I bought. So when I am initiating 3rd of August, and same way 16.5 put option also I have taken. So though it is not obeying the calendar spread logic or the rule of 65 point spread, however I have formed it. So it is 100 plus point we have formed. So I will be just calculating the profit and loss. I got it that every day it was giving some good profits, and in between it has rised and some fall also happened, and finally it is settling at a profit of 745, and this is the expiry date was there, so we did not get any, so all values become zero. So 25th August was the expiry date. So this was happened. Suppose I want to test whether the same strategy, very carefully listen to this, whether the same strategy has worked in the month of June, July or June. So then 2 to 3 months, if I can test it, I can able to know, yes, the similar kind of strategy works. August I have tested, so I am going for July and I am going to clone it. So this process, it for testing your strategy, this tool make your things very easy. So here you can see here, this is being formed for the month of July and August. See the expiry here, 28th July, 25th August. So same depth, so it was 15,835. So based on this, same depth is being created and it has cloned the strategy. Now if I calculate the profit and loss, you can see it is all the days it is loss. Only one day it has gone to 40 rupees, other days it is loss. So July and August and September, why it has worked? Because September was almost a consolidated month. So or that August was a consolidated month, so it has worked. So here July and August, this particular strategy did not work. Suppose if I am going for the month of June, let me clone this strategy based on the same logic and see whether this particular strategy worked on the month of June or not. So here strategy, once you form, only by choosing on any of the historic month and cloning that strategy, you will come to know whether that strategy has worked on that month or not. So I have just chosen that month of June and it has selected this strategy. So you can see it was spot was 16,584. Same process, the strikes has been chosen. Now you can have a look here. So this month also it has not worked. So here, this particular tool enhance your success in option strategy to many fold. So what happened initially when we have tested for the month of August, it was giving a very good picture, it was making profit. But when the same strategy is being formed in the month of June, did not work. Same strategy when it has formed in the month of July, it did not work. What went wrong with that? So this particular, when we form strategies, these are the things is very, very critical. Any strategy, any combination, if it gives a consistent profit for past 2 to 3 months or 4 months, then it will work for us, or else it won't work. So for that reason only, what I used to say, any strategy you initiate, first test it. So we have specific mathematical logic. So whenever this is known as your debit calendar, those who have gone through smart finance option courses, what we used to say, debit calendar must be initiated with a debit spread of 65 rupees in NIFTY. Then only debit calendar will work, or else it will not work. So this is very important. So mathematically you can accept it, or you can test these things and accept it. So this tool you can able to test any 10 leg option strategy. 10 leg option strategy. So before you initiate the strategy, any combination, whether it is a saddle strangle or a combination of a saddle strangle, or it is a combination of long and short straddles, or it is a combination of your debit calendar and credit calendar, you must test it. Test it from the trailing 2 to 3 months or 4 months. So the prevailing situations will be known to you. You'll be knowing that yes, this particular combination works well and that will work well. So it will, the failure trades will reduce. It will not nullify or make you a champion in the option trades. So that it may not make you, but the failure in the option trades will reduce definitely. So this is about our option strategy testing tool, and it has many other features. So those who are having the tool, they will be knowing you can form user option strategy, 10 leg option strategy you can form. You have a Greek scanner where all the Greeks, so Greeks of the entire basket of options, you can get it. So all Greeks. So whatever the strikes are trading, all strikes Greeks, delta, vega, theta, omega, everything you can get. So this has, you can form any 10 leg strategy. It has an advanced price trend analyzer. It will tell which is the consolidation band and all. So everything is there. That earlier videos I have taken it. So any strategy you form, I'll recommend better test it. Test it at least from the past 3 months to 4 months. So at least that many months you have to test, and testing is being made very, very easy by the use of this particular tool. Only you are forming a strategy, hitting a button through clone process, it creates the clone and tests the strategy. So this is the one of the best feature of this option strategy software, and those who are having the software, they can take the benefit of that. So now Srikanth will discuss about what Smart Finance offers to the traders. What are the products we have? What are the services we offer? That Srikanth will explain. So over to Srikanth.
Hello traders. So good morning. Actually, we're gonna see that Smart Finance has two products. So one is courses, one is software. So in courses, we're gonna see, we can learn. So the strategies, how it's gonna work, and how now we can trade it using that courses. So we can learn from it. The courses we have here. So this actually we have softwares, so which are useful to trade using this automated. So getting the data and analyzing and trading regarding with that. So it is very useful, the softwares. So also we have the offers. So for all courses, so we have this 30%, 37% discount. So the price is 11,800. So where you can get all the courses in one package like that with the 37% discount. So we have also the discount on all softwares. So we can get, so by 16,520. So So we'll get the all softwares in this by 63% discount. So also we have another discount on full package where you will get the two products, like means softwares, all softwares, and also all courses. So we'll get the discount with 64% discount, 22,420. You'll get in this. Yeah.
So here, all in all, two segments of the products we have. First segment is courses, second segment is our softwares. In courses, we have 6 different courses on GAN, Fibonacci, Elliott, technical. As I used to say, how these courses are different. Yes, most of the courses, if you see, most of the books, if you read, they're just copycat. You can say Bollinger Band in A book is equal to the Bollinger Band formula in the B book. Same you will find out in the C book. So any book you open, the same formula will be there, same trace will be there, here to buy, here to sell, all things will be there. But the mathematical changes of those things is not there. So here what happens? The mathematical explanations, like I said, how you can make one technical indicator to a forward indicator. So those parts you will get. Even simple candlestick also has a mathematics. Simple candlesticks. How the candlestick pattern will give you a breakout, that also you can able to calculate. So all these things you will get it in our courses. And softwares, so we have individual products. You can say that if you are interested only in the option strategy software, you can purchase it. If you want only smart IT tools should solve your purpose, that also you can do it. However, GAN time analysis tool also it is separate tool. So some people say that no, I need the smart IT, means I need all softwares. All softwares, whatever you have, we want. So there we give them a discount. So all softwares you can get it as 16,520. But individually if you buy, it will cost you more. Suppose someone wants that, no, I want the all courses and softwares. For them also we give a hefty discount. So this is a choice is yours. Either you want to go for a single product or you want to go with all the products. So that is choice is yours, and we have given our numbers here. If you have any query related to the product, you can call us in this number. So we have analyzed, and you can say NIFTY future worked perfectly today, and as per this study, the first bottom breakout is being given. So watch out for the third and fifth bottom for the day. So today we are expecting third or fifth bottom to be created. So with this, all these programs recordings, you can find it in our YouTube channel. You can see that all past 5 days recordings are available in your free time. You can go through that. So that will give you a better understanding on the tool and how to use the tool. Thank you very much. Thank you for your time.